Hey, in this video, I'm going to go through the 3 nevers that you have to follow. These are the pillars to building wealth through real estate. I started with a duplex. We bought over $100 million of multifamily real estate today. I've studied the greats. I know what it takes to build wealth through real estate. I want to share exactly, if you follow these 3 steps I'm going to talk about today, you cannot lose in real estate. Hey, what's up, guys? My name is Ellis Hammond, founder of Symphony Capital Group, full-time multifamily real estate investor. And I know what it's like to start from scratch. I was a college pastor. I had no money. The first deal I ever bought was a duplex in San Diego, California. We moved into one of the units. A family member helped me come up with some of the money in order to buy it. And since then, we've scaled our portfolio to over $100 million. We've raised nearly $10 million and partnered with other people to go buy those deals. But I've been studying the greats, right? I've been studying the Black Rocks, the big people who go and buy billions of dollars of real estate, because that's what I want to do. And I've just created a simple set of rules that I follow that help me when I'm buying real estate. And so I wanted to just put those on paper today for you as well. And even if you're not going to be an active investor, maybe you're a passive investor, wherever you're at on your journey, I'm telling you, if you follow these 3 rules today, you can't go wrong. Real estate is not a get-rich scheme, right? It's not one of those. It's not an e-commerce store. It's not a pyramid scheme. It is a get wealthy for sure way of doing things if you follow these 3 rules. And so really simply, here's what they are, and then I'm going to break them down throughout this video. So rule number 1, never use your own money. Listen, this is, I think, the biggest mistake most people fall into when they're buying real estate. They're making buying decisions. They're buying real estate based on their personal budget. The reality is, you can't even buy good real estate if you're just using your own money. And so, like, what do I mean by that? Like, you can't even get good financing or non-recourse loans until you're over like $1 million of loan size, right? And so if you're just buying real estate with your personal budget, you can't even get to the better lending. There's something called non-recourse loans, which means I take out a loan. Like if you buy a single family home, that's a recourse loan, right? Meaning the bank is going to collateralize the loan with your personal assets. Very different with non-recourse loans. The bank is going to collateralize the loan with the asset, and your personal assets are not inside the picture. So even in terms of financing, you can't even get good financing until you go bigger, right? And so I think this is one of those things that you like. It is such an important rule, just so you can go buy better deals. You can go buy better real estate. And so we're doing something called syndication, or we crowdfund. You don't necessarily have to go do that. I do think that's a good model. But even just consider you got 50 grand or you got 100 grand. Do you not think you have 5 or 6 people you could go find? You could convince them that, hey, why would you also just go buy a single family house or just go buy a duplex? What if you could put together an LLC and 3 or 4 of your friends all put together $100,000, right? Now your buying power went from 250 or 300 grand to maybe 1.2 or 1.5, and you're inching closer, right? You're getting closer. The other thing about bigger real estate deals is that you have multiple streams of income. When we buy large apartment buildings, 200 units, for example, right? We have multiple streams of income. We're not just reliant on the tenants paying rents. We have pet fees, right? We have washer and dryer fees. We can build fenced-in patios. We have parking that we can charge for. You begin to treat it like a business as multiple streams of income. Much, much harder to do on smaller real estate. And so I think the first rule is to get out of this mindset that I have to make buying decisions based on my personal budget and figure out how to use other people's money in order to buy bigger deals. All right, rule number 2 is never sell. Never sell. Never sell. Ask any of the greats, any long-term investors, they'll say the best thing about real estate is the tax advantages. The reason real estate is one of the best, most predictable wealth-building vehicles literally on the planet is because of the tax advantages you get from owning real estate. You have the depreciation, which is a paper loss that you get from owning the real estate that you can offset on the income. So all of the money you got coming in, right, from the real estate, the depreciation cuts that, right? So you're essentially getting tax-free income that comes every single month off the real estate. That's really important, right? The other thing is there's something called a cash out refinance. So what we do in our buildings, we'll go in there and we come up with a business plan to increase revenue by 30 to 50% in the first 24 months. And that might be renovating units, right? That might be doing some type of exterior stuff, but something that drives revenue in the property. And then what we'll do after 3 years, we'll go to the bank and say, hey, okay, bank, listen, we bought this deal for 25 million bucks. We've put in about let's just call it 2.5 million of CapEx, right? And we were able to increase the revenue in this deal by, who knows, probably 600 grand. I'm just using some examples of previous deals. And so with that 600 grand, it's really simple. Here's the math. So you take 600 grand, you divide that by the cap rate of the market by, let's kind of call it 0.05. We likely have just created a scenario. We bought this deal for 25 million. We put in 2.5 million. If we were able to raise net operating income by 600 grand, we just created $12 million of equity. Okay? So how do we get that equity? Well, if we sell the deal, we're going to get taxed on all of that new equity. So instead of selling the deal, we'll go back to the bank and say, instead of giving me 100% of that 12 million, just give me 70%. So now I got 8.4 million, and guess what? No tax. I paid 0 taxes on that 8.4 million. Why? Because it's just a new loan, right? And so I don't trigger the capital gains IRS code. No one's coming after me. This is completely legal, and this is what the real wealthy do. They buy great assets. They improve the value of that asset, and as appreciation happens, either in the market or they force appreciation, they pull that cash out refi lever, and they continue to put the money in their pocket, and then they're playing on house money. You literally take all the risk off the table, and guess what? You're still getting the depreciation off the real estate to offset all the income. Now, the other thing I would say about never sell, sometimes you do sell. And I know you're like, well, you just said don't sell. Listen, sometimes you just don't want to own the asset anymore, right? Or it's too hard to manage. That's happened to some of our stuff. So the only reason we would sell is it's not, we don't want to manage it anymore. But if we do something called a 1031. A 1031 exchange. This is something that the government allows us to sell the asset and then take our basis, the equity we have in the deal, and roll that into a future real estate deal. And as long as we do this, a 1031, we also don't have to pay taxes on those capital gains. So if you do sell, if you're forced to sell, or you just don't want to own this asset anymore, make sure you find a replacement property to put that in, and that's how you can continue to build wealth through real estate. All right, and then number 3, and we've talked about this a lot already, but never pay taxes. Never pay taxes. This is for sure. I mean, if real estate lost its tax advantages, I just don't think a lot of people would buy real estate anymore. Because this is the beautiful thing. And let me teach you kind of an ultra high net worth trick that I have learned and acquired and begin to do myself. This is what the wealthy do. And just follow these steps here, okay? You have your active income stream, right? So most wealthy folks built their wealth maybe with a business, and so they have their income stream, right? This is step number 1, okay? They have their income stream. Step number 2 is that they buy real estate, okay? They buy real estate. Step number 3 is that they become a real estate professional, a real estate pro. Now, there's a couple ways to do this. The IRS says you have to work 7,500 hours a year in order to become a real estate professional. Well, if you work as, you already have an active income source, or you have a business or a job, that's going to be hard to do. So this may take time to consider this more of a passive thing, and this becomes your main business, owning real estate. The other thing I see a lot of folks do is they'll have their spouse get their real estate license, and they can become a real estate professional. And the crazy thing about this is once you follow these steps and you become a real estate professional, then you use the depreciation, right? Depreciation off the real estate, which again, I showed you earlier how the depreciation offsets the passive income on the real estate. Well, once you're a real estate pro, you can use all of this to offset your taxes on your ordinary income. And that means you have all of the money from your real estate, you have all of the money from your active income, and you're still paying zero. Literally, this is what the wealthy do. This is why people were pissed when Donald Trump came out with his tax return and he was paying very little in taxes. Why? Because he's figured out how to never pay taxes through real estate. Listen, you can either hate the player or hate the game, but these are the rules, right? These are the rules that are made up that we can follow, that you can follow. And once you know the steps, this is how you can build ultra wealth through real estate investing. It's one of the best vehicles on the planet for sure in this country to really get rich, to really build wealth, to really build a legacy that cannot be destroyed. And that's what's important. So the 3 never evers, again, number 1, never just use your own money. Figure out how to leverage and use other people's money to buy real estate. Number 2 is never sell. Use that cash out refi. And if you do sell, use the 1031 to avoid taxes. And then number 3 is never pay taxes. Figure out how to become a real estate professional. Use depreciation to offset the passive and active income that you have coming in, and build an indestructible legacy for you and for your family. My name is Ellis Hammond. If you enjoyed this, make sure you hit subscribe, like this video. Think wealthy. Cheers.